All right, so who wants to get rich? I know I do,
Yeah.
especially during a market crash.
Yeah, for sure.
Well, that's what this YouTube video we're looking at is all about.
Oh, yeah.
It's called How to Get Rich in a Market Crash. So I figured we should deep dive into this and see what we think.
Yeah, definitely.
So basically the video is saying
Yeah.
that to get rich during a market crash, you gotta borrow a lot of money,
Okay.
like a ton of money, and then use that to buy assets.
Wow.
And they say that this is how they did it.
Okay.
They borrowed $300 million
What?
after the 2000 crash to buy real estate.
That's a big number.
Yeah, I mean, 300 million.
Yeah.
It sounds like a movie or something.
Yeah, that's a whole different world.
But so what do you think about this? I mean, is this a good idea? Is this real?
Well, I mean, it's definitely a bold strategy,
Yeah.
but, borrowing that much money is extremely risky, especially during a crash.
Right, because like everything's going down.
Yeah. Yeah, you don't know what's going to happen.
You don't know where the bottom is.
Exactly. You just don't know.
So even if you're buying things that seem low, they could still go lower.
Exactly. And you could end up, in a lot of trouble.
So what's the problem with buy low, sell high then?
Well, buy low, sell high is a good idea.
Yeah.
But in a market crash, it's really hard to know when the low is.
Right. Yeah, that makes sense.
And then also when you're using borrowed money,
Yeah.
it magnifies your gains, but it also magnifies your losses.
So it's like a double-edged sword.
It is.
If the market goes up, great, you make a lot of money.
Yeah.
But if it keeps going down, you're really in trouble.
You're in big trouble
Yeah.
and a lot of debt.
So timing is everything.
Okay.
But even then, it's still a gamble.
Oh, yeah, definitely. It's always a gamble.
Yeah. So if this is so risky, what are some better ways to get ready for a market crash?
Well, instead of trying to time the market,
Yeah.
it's better to have a diversified portfolio that can handle the ups and downs.
Diversification, what does that mean?
So diversification just means spreading your investments across different things, like stocks and bonds, real estate, commodities.
Right.
That way, if one area is doing bad, another one might be doing well.
So don't put all your eggs in one basket.
Exactly. That's a great way to put it.
So like in 2008, when the financial sector went down, a lot of other things were less affected.
Exactly.
So if you had a really diverse portfolio, you might have been okay.
Exactly. You would have been more protected.
Okay, so diversification, that's a big one. What else?
Another thing is to have a long-term view.
Okay.
So market crashes, they happen. They're part of the cycle.
Right.
But over the long term, the market tends to go up.
Okay.
So if you can ride out the crash, you'll probably come out ahead in the end.
So be patient.
Be patient, yeah.
Okay.
And one more thing.
Okay.
Cash is king.
Oh.
Especially during a crash.
Okay.
So having some cash on hand lets you buy things when they're cheap.
Right.
Like stocks or real estate.
So while the video makes it sound easy, getting rich quick, it's probably better to have a long-term plan.
Definitely.
Focus on diversification and be patient.
Yeah.
Have some cash.
Exactly.
Yeah. So what are some things that our listeners can do?
Yeah. So given your own financial goals and how much risk you're comfortable with, what are some things you can do today to build a portfolio that can handle anything?
That can handle anything.
Yeah. A market crash, a recession.
Yeah.
Anything.